Hello nieces, hello nephews, it's your Uncle Charles here. Welcome back to my YouTube channel where we do unbiased price action analysis. Question now is the market starting to look a bit toppy here, guys? Alright, now I'm not trying to sound like a bearish person or a bullish person here. It's just about common sense. Because we see this move, it was a beautiful false breakdown setup. It was so beautiful. I love it. I tell you guys about the false breakdown setup, right? You guys know about that setup. And it was also an inside candle setup too. Setups on setups. It's like the price action just communicates with you. And then yeah, it got the breakout, the gap up. Thanks to election day, Trump 2024 and all that happy stuff. And then it led to a few more days of more upside. Even yesterday's intraday price action was meh. But technically on the daily chart, it was a higher close than the previous day. So we got multiple green days in a row. And you see that how vertical it is. Pretty vertical. But also notice how the candles are getting smaller. Okay. That's a sign of momentum is weakening. Okay. The volume is also decreasing. So the question is, are we starting to look toppy? When we look at triple Q, you can see it here. Like the momentum is starting to get weak. NVDA look like an evening star pattern over here. Tesla, I mean, it had the big gap up, but look at the context here. Friday was a big body green candle. Yesterday on Monday was a choppy candle, doji. Now we're gapping down about $6 as of speaking. We'll see where the market opens, but usually, when you get something like that, that's a sign of an evening star as well. IWM doesn't look too bad. Apple, it back tested that critical resistant level yesterday at 228.4 and found rejection. Well, it back tested last Friday. Yesterday showed some follow through. We'll see if it shows more follow through today. Amazon, broke down a resistant level, got a false breakout setup on the daily chart. Meta's retesting the 20 DMA. Microsoft broke down the inside candle setup bearishly. So multiple ticker symbols that I look at are showing signs of bearishness and losing bullish strength. Now, is this Uncle Charles telling you to go short? No, this is not me telling you to go short. This is not me telling you the top is in. At least not yet. Okay? But this is me telling you to just be careful. Maybe good time to trim off if you're in longs. Maybe good time to trim a little bit. Secure some of the profits. Leave the runners. Okay, maybe size down. Okay, I'm saying this, it's all about risk management. Okay, it's about risk management. But as far as the levels and setups go, this is my plan as always. I identify the levels. I understand that based on the levels, what setups I'll be watching for, because the setup is how I react. So if we break down, for example, if we break down 597, you guys know 597 served as support, a buy zone yesterday. So if we break down 597 today, that was showcased to me that, hey, all the buying pressure we had yesterday is gone. And there should be nothing stopping SPY from going to hit the next target at 595. Does that make sense? So if we break down 597 today, I would be looking to short. And I would target 595, take most profits at 595, leave a runner in case the market wants to bless me with a bigger move. And if I do swing, I'll swing my runners. Make sure you have time on it. And below 595, 593, 590, 590.4, 588, 586, and so on. Okay, those would be my downside targets, but it don't matter unless we break down 597 and 595. Then we can possibly go hit those targets. So once I know the levels and setups, I'm just looking to react unbiasedly. And I have to identify the bear case and the bull case. So I just gave you guys the bear case. But for the bull case, 599 and 600.5 must clear, and I would go long. Okay, I would be surprised if we break those levels today. But if it does, like I always say, don't argue with the price action. So that's the bull case. Clear 599. I'll look to long clear 605. That'll be bullish follow through. And we could go to new all-time highs. 602, 604 or higher. Okay, guys. Triple Q. 512 and 510 are support levels. All right, that zone served showcase some buying pressure yesterday. Can the bears break it down today? If they do, 512 and 510, break it down. Pullback time, a healthy pullback. You guys see how vertical this is. Even if you're a bull bias trader, you gotta look at this and be like, man, that's pretty vertical. It's unhealthy. Okay, it can still go up higher, and if it does, I won't argue with it. You know, if we clear 514 and 515.2, I'm definitely looking to long. I'm not gonna argue with the price action. I don't care what the RSI says. I only care what the price action says. So if we clear 514 and 515.2, I would look to long. That's the bull case scenario. Otherwise, we break down 512, 510 breaks down, look to short. NVDA. Looking like some type of evening star pattern here, guys. All right. Below 144. If we break down 144, I would definitely go short. That would definitely be bearish follow through. 142 would be in play for, well, yeah, 142, 140, 138. Those are the levels I'm sticking with. Okay. Breakdown of 144, look to short. I'm not trusting the bounce unless 146 and 147.5 recaptures to put 149 back in play with 150.5 and 152 above. Okay, I'm trusting no bounce unless 146 clears and 147.5 clears. Otherwise, we lose 144. We are heading down lower. Tesla, we had, like I said earlier, big body green candle Friday. Yesterday was a big gap up, followed by a doji. Right now, we are gapping down. Yesterday, we closed at 350. In the pre-market, we're around 344ish right now, okay? Got to be careful of an evening star pattern. Evening star pattern have a decent body green candle, followed by a gap up, doji, and then a gap down. When that gap down usually leads to a big body red candle. That means beautiful move to the downside. We still need to look to react. Don't jump the gun, guys. Don't jump the gun. Support is at 343 and 341. So if this evening star pattern does play out, you want to look to short. If 343 or 341 fails, targeting the lower levels. Okay, 339, 337 or lower. And if it does play out like an evening star pattern, it's going to be a decent move to the downside. Lots of money to be made. But you got to let the price action give you guys the signal to go short. Okay, because we're not the only ones that can see this evening star pattern. Market makers will set up a potential evening star pattern, get everybody bearish, and then they'll shoot it up to the moon. Why? Because they can. Okay, it sounds messed up, but that's what the market makers do. So you got to follow the price action. Don't get played. So loss of 343, 341 is your trigger to go short. But if we clear 345, if we clear 347, if we clear 350, I would not look to short. I would look to long and target 360 and possibly higher. 358.6, 360 would be my targets. IWM, it cleared a fib level, 240.8 yesterday. Right now it is below that, but it needs to get back above 240.8 to keep the breakout intact. And if it breaks out, 243, 244.6 or higher will be in play. Below 240.8, yesterday's breakout will be questionable. All right. And if we break down 239.8, we are likely heading down to 238 and 236. Below 236, I will be bearish and favor a deeper correction to the downside. 232, 230, and 228 would be first targets. Apple, still looking bearish to me. And bears need to show follow through by breaking down 223 and 221.4. If those levels fail, bears follow through. We are heading down lower. However, we did test the fib level at 221.4 yesterday, and it bounced. Bullish follow through would be to clear 225, 227, and put a bottom in by clearing 228.4. Could be a W pattern playing out too, okay? Like I said, above 228.4, I would favor a bottom is in. If we lose 223 and 221.5 today, bearish. Amazon broke down a fib level yesterday at 207.2. Next supports at 206 and 204.7, okay? If those levels fail, bearish continuation. Loss of 206 and 204.7 is bearish continuation with 203, 201, and 199 in play. I will trust no bounce unless 207.3 can recapture. And if it does, 209, 210.5, and 212 will all be in play. Meta retested the 20 daily moving average yesterday, which is also around my 23.6 fib level at 577.6. So to be bearish is quite simple from here. Okay, I have support at 581, 579, and 577.6. Those levels must fail to go bearish. Below 577.6, I would be bear bias and favor the gap fill at 572, 570, and possibly send us all the way back down to the lower 560s. That would be a beautiful move, but we need to lose that 20 daily moving average and that fib level at 577.6. Now, if we clear 583, we could get a bounce back up to 585, 586, 588, and 589.5. Those will all be targets. Bottom is in above 589.5. Microsoft looking bearish to me. And if we get bearish follow through, 417.2, 416, and 414.6 must fail to show to us that we are heading down lower. If it is time for a bounce, then resistance at 420 must clear. 420 clears, I will trust to go long. 422, 423.4, 425, and 427 will all be back in play. A bottom is only in my opinion, if Microsoft can get back above 427. And holy moly, look at Doge. I gave you guys the levels and setups. If you guys bought shares of this and you traded it, congratulations. Support right now is at 0.3775. That is support. I will not look to short Doge unless 0.3775 fails to put 0.345 and 0.32 back in play. All right. As long as above 0.3775, we are heading up higher, guys. 40 cents, 42 cents, 44 cents are all targets, and above 44 cents, holy moly, donut shop. We're gonna have to look to the left. Above, oh my goodness, above 44 cents, we could head up to the mid to high 50 cents, guys. All right, maybe all the way up to 60 cents. That's a previous pivot high from years ago. Can we retest it? A previous pivot high from 2021. Can you guys imagine? Look at this, guys. We haven't hit these levels on Doge in years. Since 2021, Doge has not been this high. Okay? I think this is worth paying attention to. And remember, for all my longtime viewers, my loyal viewers, you guys know Uncle been covering Doge for the last few days before we even had the bounce. Uncle started covering Doge when it was still in the 15, 17, 19 cents. Now look at that. We double, triple. Oh my goodness. All right. So remember the levels I gave you. And guys, have fun trading. Keep it simple. Stay unbiased. Bah! I haven't said that in a while. Peace.